Can you actually predict what Congress is going to do with your money next year? Or are you just hoping for the best while the clock ticks? Because right now, with trillions in tax cuts set to expire, the stakes have never been higher for everyday investors, homeowners, and business owners alike. The Tax Cuts and Jobs Act provisions from 2017 are scheduled to sunset after 2025, which means brackets, deductions, and estate exemptions could shift dramatically overnight. Think of it like a lease on your financial life that's about to come up for renewal, except your landlord is 435 people who can't agree on lunch. What got us here is a combination of political gridlock, ballooning deficits, and a Congress that historically loves to wait until the last possible second to act. The macroeconomic pressure is real. The national debt just crossed $36 trillion. And somebody eventually has to pay for that party. We went from 2018 headlines celebrating the biggest tax overhaul in a generation to now quietly wondering if any of it survives. The optimism that fueled small business expansion and investment strategies has been slowly replaced by a fog of uncertainty that even seasoned CPAs aren't willing to cut through with confidence. Economists like Larry Summers have warned that letting these cuts expire would effectively be the largest tax increase in modern American history, while others argue it's simply a return to normalcy. The psychological weight of not knowing is causing real paralysis. People aren't making estate plans, they're not restructuring businesses, and they're sitting on capital gains like it might somehow resolve itself. History tells us this isn't new. We saw similar cliffhanger moments in 2012 with the fiscal cliff and in 2017 with the reform itself. Every cycle feels apocalyptic in the moment, but the pattern is almost comedic. Congress panics, partially extends, partially reforms, and the sun somehow still rises on January 1st. Here's the uncomfortable truth about tax law cycles they follow: political power, not economic logic. And whoever controls the White House and the Senate in November writes the next chapter. Community tax strategists and financial planners are already circulating predictions around Roth conversion windows, accelerated depreciation strategies, and gifting thresholds. And listening to that chorus of voices is actually worth your time. One of the biggest misconceptions is that tax planning is only for the ultra wealthy. But the reality is that middle-class households and small investors often have the most to gain from proactive repositioning. You don't need a family office. You need a 15-minute conversation with a CPA who actually tracks legislative calendars. The practical lessons from every previous tax law shift are remarkably consistent. Those who moved early captured the benefit, and those who waited for certainty paid the premium. Max out your retirement contributions now. Consider accelerating income into the current lower bracket environment. And if you own property or business, get a qualified opportunity zone or depreciation review on the calendar before year end. Discipline over drama, that's the entire playbook here. You're not trying to bet on what Congress does, you're trying to make sure you've already positioned so that either outcome doesn't blindside you. The irony is that the people most anxious about tax changes are often the ones doing the least about it, while quieter, less flashy investors are methodically repositioning like it's already done. Sizing your moves correctly, not going all in on any single strategy, is what separates the prepared from the panic. At a philosophical level, uncertainty in tax law is just the cost of operating in a democracy with competing interests. And accepting that reality frees you to focus on what you can control. Process, patience, and preparation aren't sexy, but they are the only three things that have consistently created wealth across every tax regime in American history. Whether rates go up, stay flat, or somehow get cut further, the person who has reviewed their structure, diversified their tax exposure, and stress-tested their portfolio against multiple scenarios is the one sleeping well in January. Comfort with any outcome isn't naivety. It's the earned confidence of someone who did the work before the deadline. And if you're ready to take that next step, whether it's real estate investing, home renovation projects, or connecting with the right lenders, check out our links in the description below. And let's get you positioned before the clock runs out.